This week, Li Auto is driving forward with their IPO. Today, we'll take a deeper look at the company by looking at their first vehicle that's made it to market and look at the pros and cons of the company from an investor's viewpoint. There are some things to like and maybe not like so much about the company and their offering, so stay tuned. Welcome back to Healthy, Wealthy, and Wise. I'm Kevin, and today we're going to follow up this week's episode of IPO This Week, where we gave an introduction to all the companies, including Li Auto, going public this week. While the list of companies were diverse in the industries they represented, there was a distinct lack of star power in the offerings. In that video, I mentioned that we were looking forward to see if rocket companies might jump on this week's calendar, but it's looking like that will occur next week, with early indications of trading beginning next Thursday the 6th. If that does happen, we'll plan to start the week with our IPO This Week intro show again, reviewing all the upcoming week's offerings, and then follow that up later in the week with a more detailed look at rocket companies. Now, when I looked at this week's offerings, I felt like Li Auto might be the most intriguing one of the bunch to take a deeper look into because of the closely watched growing electric vehicle market, a huge potential pool of customers, and bringing some different technology to the market. So let's jump into it. Li Auto describes their company as an innovator in China's new energy vehicle market, where they design, develop, manufacture, and sell premium smart electric SUVs. They claim to have been the first to successfully commercialize extended-range electric vehicles in China. Their first model, the Li One, is a 6-seat large premium electric SUV equipped with a range extension system and what they claim to have as cutting-edge smart vehicle solutions. The company was founded in 2015 and began production of Li One in November of last year and delivered over 10,400 vehicles as of June 30th, 2020. The company believes that the Li One offers customers unparalleled value with the performance, functionality, and cabin space of a large premium SUV, but pricing close to a compact premium SUV. China is both the largest passenger vehicle market and the largest new energy vehicle market in the world as measured by sales volume. Of that market, over 81.3% sold in China last year were battery electric vehicles. In the registration statement, the company identified two big challenges facing new energy passenger vehicles. Number one is inadequate charging infrastructure. Currently, charging infrastructure is a bottleneck of China's new energy vehicle market. The inconvenience of and lengthy time needed for battery EVs charging solutions causes range anxiety, which limits use cases and impedes the wider acceptance of battery electrical vehicles in China. China faces a problem of inadequate private and public fast charging infrastructure. The development of private charging infrastructure is affected by limited residential parking space in cities with high population density, low percentages of residential parking space suitable for installing home charging stalls, and power grid capacity limits in aged residential areas. According to the company, as of December 31st, 2019, fewer than 25% of families in first-tier cities in China had parking space suitable for installing home charging stalls, compared with over 70% of families in the US. As a result, a substantial number of battery EV owners in China have to rely on the inconvenience of a public charging infrastructure. The second big challenge is exceedingly higher costs compared to traditional internal combustion engine vehicles. The current cost of manufacturing new energy vehicles, especially battery EVs, far exceed those of comparable traditional powered vehicles. While government subsidies and other favorable incentives are used to enable automakers to price new energy vehicles competitively, the phase-out of subsidies makes it difficult for automakers to price these new vehicles at levels that are attractive for consumers while still generating appropriate profits for themselves. For large battery SUVs, it could cost an extra 30 to 35% compared to a large internal combustion engine SUV. In addition, battery EVs generally use a higher percentage of more expensive lightweight materials such as aluminum for the vehicle body and suspension system in order to balance the heavy weight and accommodate the large size of battery packs. Considering those challenges, let's now look at what Li has done to address them with the Li. While this might be a little more detailed, I think it's important to see if the company is bringing anything to market that could be a differentiator which could enhance the company's odds of success. With the Li One, it primarily implements a proprietary extended-range electric vehicle technology that is purely electric driven by its electric motors, but its energy source and power come from both a battery pack and range extension system. The range extension system generates electricity with a dedicated internal combustion system. Does this sound a little familiar to you? I'll get back to that in a second. But back to the Li One for now. It currently offers 3 driving modes where the driver can freely switch between at any time while driving based on the driver's needs to prioritize either saving fuel or maintaining the battery state of charge. The first is e-Power mode. This mode is designed for customers with convenient access to charging infrastructure. Under this mode, the vehicle will drain power from the battery without activating the range extension system for about 150 kilometers, essentially operating like a battery electric vehicle. The range extension system will power up when the battery's displayed state of charge is around 17% and propel the vehicle and maintain the dynamic balance of the battery state of charge. When the fuel tank is empty, the range extension system will cease to operate and the vehicle may continue to drive approximately 30 kilometers, draining power from the battery. Next is the hybrid mode. This mode is designed for customers who can occasionally access the charging infrastructure. Under this mode, the vehicle will drain power from the battery without activating the range extension system for about 60 kilometers, operating like a battery electric vehicle. The range extension system will power up earlier than under the e-Power mode and propel the vehicle. Then the hybrid energy of the fuel and electricity from the battery can offer a balanced experience between performance and fuel efficiency. When the fuel tank is empty, the range extension system will cease to operate and the vehicle can continue to drive approximately 30 kilometers, draining power from the battery. And the last mode is the e-Hold mode. This mode is designed for customers with virtually no practical access to the charging infrastructure. Under this mode, the vehicle will drain power from the battery without activating the range extension system for about 60 kilometers, again operating like a battery electric vehicle. The range extension system will power up earlier than under the e-Power mode and maintain a dynamic balance of the battery's state of charge at a higher level than that of the hybrid mode to preserve more power. When the fuel tank is empty, the range extension system will cease to operate and the vehicle can continue to drive approximately 120 kilometers, draining power from the battery. The Li-1's energy can be replenished by slow charging, fast charging, and refueling. Li-1 can operate even when customers have no access to charging infrastructure, thereby completely eliminating range anxiety. To offer the same driving range as battery EVs of a similar class, Li-1 requires much less battery capacity because of that additional internal combustion engine. A smaller battery pack not only is less costly, but likely contributes to a more cost-efficient body structure design, which results in less usage of costly aluminum parts for the vehicle body and suspension system. As a result, the cost of the materials to build a Li-1 is closer to that of a traditional fuel vehicle and is much lower than the cost of a battery EV of a similar class. For the sticker price of approximately $46,000 US, the Li-1 includes their premium and technology features in one standard package, which according to the car maker are typically only included on vehicles of price only approximately $85,000 in China. Some of these standard features include Nappa leather covers, seat heating for the first and second row seats, laminated acoustic glass, a silver-plated heat-insulated windshield, a 4-display interactive system with advanced navigation and entertainment applications, a full-coverage in-car voice control system, advanced driver assistance, and firmware over-the-air upgrades. In fact, customers only need to choose their exterior and interior colors, the wheel style, and a seat layout of either 6 seats or 7 seats. So when looking at the company's current product, a couple of thoughts came to my mind. First, when you consider the technology to power the car, my first thought was that they seem to be taking the Chevy Volt approach with a backup fuel engine, which as we know never really caught on, even though it addressed most customers' biggest concern of range anxiety. The overall range of the Li-1 appears better than the Volt, but I thought the similarity with a car with lukewarm success was interesting. And then my second thought was that, unlike the Volt, it's trying to implement a Tesla approach of producing a car that has a luxurious and technological advanced feel to the driving experience. From an ongoing strategy perspective that they shared in the filing, the company looks to further focus on the SUV segment and successfully launch future models. They want to continue to innovate in electrification, vehicle intelligence, and autonomous driving. They want to further expand their direct sales network, which as of right now is limited to a direct-to-consumer model. And they also want to pursue operational excellence and cost improvement. So at this point, I think we need to consider some of their challenges in advancing their strategy. First is their limiting operating history and significant challenges in being new to this industry. Will people take a chance on a high-ticket item with no knowledge of reliability? Then there's that use of the direct-to-consumer approach and how that can affect their growth. Also, the general risks with the ability to develop and deliver class-leading vehicles of high quality that appeal to customers, which leads to the ability to generate positive cash flow and profits. Another risk is their current dependence on a single model of vehicle. Also a risk, the overall consumer demand for electric vehicles, as well as overall consumer demand for passenger vehicles related to economic conditions. Another thing to consider are changes in government incentives or subsidies for these types of vehicles. And then finally, the ability to compete successfully in the highly competitive Chinese automotive market, especially in the premium SUV segment. And I think competition is the big factor here. Everyone thinks Tesla, whom has entered the market, but they also have top Chinese brands Beijing Automotive Group, Geely, and BYD. In fact, noticing nearly half of the world's top 10 bestsellers of new energy types of vehicles are Chinese brands, Li Auto doesn't necessarily have the domestic advantage that many might think. However, they do have the advantage over imported SUVs, as domestically manufactured SUVs possess a price advantage because they are not subject to tariffs imposed on imported vehicles, which of course is a big reason as to why Tesla opened its factory there. Where Li Auto thinks they can gain an advantage over domestic EVs is that because most are battery-only types of EVs, they feel they can prevail over some of the challenges I talked about earlier with this extended range system. As a potential investor, I think there are some other things you should consider. And I say this even knowing some people have done very well in Chinese stocks. And please remember that while I share my thoughts and information here, I am not here to make any recommendation for you to act. A big concern for me is that a Chinese company has regulatory rules that are different from the US, and that the accounting standards differ from the US's generally accepted accounting principles. And that's actually addressed in the Li filing, as they state that because their revenue was under $1 billion last year, they qualify as an emerging growth company, where they may take advantage of reduced reporting requirements compared to other public companies. These provisions include exemption from the auditor attestation requirement, and that the company does not need to comply with any new or revised financial accounting standards. And the company says they don't plan to opt out of such exemptions afforded to an emerging growth company. Okay, so in the wake of the Luckin Coffee disaster, which was based on accounting issues that are still fresh in our minds, and I'm not saying that Li Auto will do the same things, but I think that company served as an example to proceed with caution in Chinese stocks. So knowing that about the potential accuracy of the data, here is a chart of some of the financials directly from the company's filing. Additionally, as of March 31, 2020, Li had $148.9 million in cash and $474.5 million in total liabilities. And then something else to consider, according to the reporting of Don Jones on TheStreet.com, is that there's a legal consideration to be aware of where Li Auto operates within a variable interest entity structure. This means that investors would only have an interest in an offshore firm with contractual rights to the firm's operational results, but would not actually own the underlying assets. This is similar to many Chinese companies seeking to enter US markets. The company plans to raise $855 million by offering 95 million shares with an expected pricing range of $8 to $10, resulting in a $7.9 billion market cap. Management says it will use the net proceeds from the IPO for research and development of new products, for capital expenditures that they estimate for the next 3 years will be approximately $1.5 billion, and that the balance will be used for general corporate purposes and working capital. As with most growth companies, the company does not plan to offer a dividend. We expect trading to begin at the end of the week. Unless someone beats me to it, I'll update when trading actually begins in the comments section. So there you have a little more thorough look at Li Auto. We'll be back next week with our IPO This Week feature to cover the upcoming IPOs as we begin August. I can't believe it's August already. I hope you found this video helpful, and if you did, please hit that like button, share it with your friends, and subscribe to the channel with that notification bell turned on so you don't miss any upcoming episodes. Thank you again for watching, and until next time, have a great day.